David from Noosa, what can we do for you?
Hi guys, thanks for taking my call. I'm looking at two areas, Karoi and Pomona, outside of Noosa. They're in the hinterland, and I've got two parts of the question. First of all is about Pomona and Karoi, but also we're looking at little blocks of flats, like sort of 3 or 4 1 or 2 bedroom flats, and there seems to be a few of them around that are yielding around 6 to 7%. So the first question is about the, flats, I guess, and the second one is about Pomona and Karoi.
Yeah. Michael, I don't know how familiar you are with those areas, but I'm a little bit worried about these little flats. I know the kinds that they're talking about up there. Noosa isn't going terribly well in terms of its growth, nor are the areas just in the surrounding area. An attractive yield isn't everything.
I agree. Look, and I share your concerns about the Sunshine Coast. I'm hearing those reports from a lot of people, David. Small flats in highly densely populated Sydney is a different proposition. But I think in a town like Noosa, Karoi, Pomona, there's not those density problems. So they're probably not the right design, you might do better elsewhere.
Yeah, look, I just don't think it's an area that is certainly coming up on my radar at the moment. I think you can get equal yields in an area that is designed just for families, the areas that have great growth drivers in existence now that will do far better from a capital growth point of view with the same yield. Well, when you sell an investment property, you may pay capital gains tax, but there are some exemptions. Robert sent an email this week and he asked, I have a rental property which I rented since 2005 and I've since sold it. I also own another property which I'm living in. Am I able to claim the investment property as my principal place of residence and pay no capital gains tax on it as I sold it within 6 years of purchasing? Ben, I think he might have his rules a little mixed up.
I think he does. It's a simple answer to this question. If you've lived in the property, then technically, and it was your principal place of residence, then the 6-year rule will apply. If you haven't lived in the property, then there's no tax exemptions on capital gains.
So let's just get this 6-year rule correct. It needed to be your principal place of residence first up. Then you needed to move out of that and live somewhere else for up to 6 years, and you either sell it within that 6 years or move back into it to claim it as still your principal place of residence exemption. If it was an investment property, and it's always been an investment property, it doesn't matter how long you've owned it for, there is no principal place of residence exemption when you've lived somewhere else. So the fact that it is an investment property, the fact that it's always been an investment property, means that it will never qualify as a principal place of residence exemption unless you now move back into it and make it a principal place of residence for some time and then move out of it again. Well, we're fast running out of time, but we do still have 10 minutes or so, and we'd love to answer your questions. For now, though, it's time for another short break, but we'll be back, and if you'd like to ask a question, call us now on 1300 30 34 35, or of course you can email us at property@skynews.com.au. Welcome back to Your Money, Your Call. I'm Margaret Lomas, and with me on the panel tonight is Ben Kingsley from Empower Wealth and Michael Tees from Tees Lawyers. There's still some time left for you to call and ask us any question about property investing or even selling a property. The number is 1300 30 34 35, or you can email us at property@skynews.com.au. And Glenn from Brisbane, how can we help you tonight?
Hi Margaret, thanks for taking my call. Just wanted to ask you about Underwood in Brisbane. I bought a townhouse for $310,000 in January. Since then I've seen the prices, like the median price range from, all over the place, but they're currently about $380. So I'm just wondering whether you can take that as gospel, because what I want to do is actually leverage into another property down the track. And refinance through that loan. So I'm just wondering how long I'd probably have to wait for that to happen, do you think?
Okay, so it looks like, Michael, there's about $70,000 worth of growth at the moment. Underwood in Brisbane. What, you're a Brisbane boy? Yeah. What's your feelings on Underwood?
A good middle ring suburb, I would have thought. Glenn, for a relatively small fee, you can get a valuation done yourself. which might be worthwhile doing rather than taking a guess or believing what you may have seen in the paper. You know, strange as it may seem, sometimes everything you read in the paper is not true. And you know, if you're saying there's been a $70,000 increase in a very short space of time, you know, that might not be correct. So I'd spend $300 or $400 and get the valuation for yourself. It sounds to me like, you know, you've got a reasonably aggressive strategy happening here. So I'd spend some money and find out. And if the equity's there, then well and good. If not, you know, you've made a small investment to find out your real position.
And a registered valuation is really the only fair way of knowing. Even a real estate agent is not going to give you the kind of value that you need to know. Ben, 70. If he does happen to have the 70,000, is he ready to leverage again?
Obviously, we don't know your full circumstances, Glenn. One of the things. Sorry, are you still on the line?
Yes.
Glenn, are you working with a broker or with a bank?
No, I haven't ventured out yet. I'm just sort of wondering whether those, you know, the prices seem to change, the median prices every month, you know. So I'm just wondering whether they're right to believe or whether I should be waiting a couple of years, you know.
Usually there is a lot of statistical, you know, adjustments on a quarter-to-quarter basis in certain areas. So we may not see that trend in that particular area. But what I will be saying too is if you are working with a bank or a broker, the other option you may have is to potentially get that property valued. It has been over 6 months, and most lenders will allow a valuation on a property after that 6-month period. So if you've got a professional package with one of your lenders or you're working with a broker, that's another way of looking at it and making sure that, sure, we've got a lot of equity that's just come through, but ultimately it's also making sure that we've got the borrowing capacity to execute the next property.
And of course, Glenn, it's a little bit cheaper if you go through the broker or the bank to get the valuation done as well. That's usually around about $200 or so. Still for your registered valuation, it just doesn't come with all the photographs. And a lot of people don't know, but you can apply to that bank in writing to have a copy of that valuation released to you. A lot of people think that the bank won't give it to them, but they have to if you ask for it in writing, since you're the one paying for it. So you might want to give that a go.